Jai Hind dosto. So if you are NRI based in USA or Canada and want to invest in Indian mutual funds but have a lot of confusions such as which bank account to open, which Indian mutual fund houses accept investments from USA and Canada, which documents to submit for KYC, if there are any apps through which you can invest, and how much tax you have to pay, then this video is for you. Stick around till the end as we'll answer all these questions and try to solve your doubts. So there are 3 steps that you have to follow. So step number 1 is to open NRE or NRO account. NRE stands for non-resident external account and NRO stands for non-resident ordinary account. So if you already have your NRE or NRO account open, then you can skip to the step number 2. You can open your NRE or NRO account by contacting an RBI approved Indian bank. In these accounts, you can send your foreign currency investment, which will be converted into Indian rupees for your investments in mutual funds or equity. Now, to quickly explain which account should you open, NRE or NRO. So if you have any income generating from within India, such as rents, dividends, pensions or business income, then you must have to opt for NRO account. And if you don't have any sort of Indian income, then you can choose either NRO or NRE. Few things to keep in mind is that NRE account is repatriable, means you can transfer your money to your country of residence without any restrictions, whereas in NRO account you have the cap of $1 million per year to transfer back to your current country of residence, say Canada or US. The second point is in NRE account, interest earned is non-taxable, whereas in NRO account it is taxable. The third point is if you already have a regular resident savings account in India and don't want to open an NRE or NRO account, then don't do that, because using your existing account after becoming an NRI is not legal by law. You might also wonder if you can directly pay from your foreign bank account to the asset management companies or mutual fund houses in foreign currencies. Then unfortunately the answer is no. You must have an Indian NRE or NRO account to convert your foreign currencies to Indian rupees. Now let's jump to the second step. So once your NRE or NRO account is set up, these accounts can be used to disperse funds and receive interest and dividends. Basically, you can carry out your regular transactions through standard banking. However, before making investment transactions with mutual fund houses or asset management companies, there are specific compliances to address, and the main requirement for NRIs to invest in mutual fund is to complete KYC compliance. So to complete your KYC, you will need to provide certain documents along with the application form, and these include your PAN card, proof of overseas address like utility bills or internet bills, your passport, photos, and if you hold a foreign passport, then you have to provide your OCI card. So apart from these documents, for NRIs residing in USA and Canada, investing in mutual funds involves a bit more hassle compared to other NRIs. And this is mainly due to the extensive compliance requirements imposed by the Foreign Account Tax Compliance Act, known as FATCA. Now to quickly explain what is FATCA, so this is a United States federal law that imposes rigorous reporting requirements on foreign financial institutions, including Indian mutual fund houses. And the compliance with FATCA necessitates extensive documentation and meticulous reporting to the IRS, making it complex and resource intensive process. Now the most important point here is that you have to provide your tax identification number and or global intermediary identification number. And because of these complications, not all asset management companies, mutual fund houses, and third-party broker apps accepts investments from USA and Canadian NRIs. But don't worry, I'll I'll provide you a list of some asset management companies which accepts investments from NRI residing in USA and Canada. As mentioned earlier, just want to make sure one more time that you will have to share your FATCA details and tax identification number along with the KYC details. So let's reveal the list of mutual fund houses that accepts investments from US and Canadian NRIs. But before that, I just want to make a small humble request that it takes a lot of efforts to research and authenticate the information for you guys and to make a video on it. So if you appreciate and want to support this effort, please consider subscribing to the channel for more such informative videos. So here is the list: Sundaram Mutual Funds, L&T Mutual Funds, UTI Mutual Funds, Aditya Birla Sun Life Mutual Funds, Navi Mutual, ICICI Prudential, SBI, Nippon India. All these mutual funds accept investments from USA and Canadian NRIs. I have heard there are some other funds also accepting the investments which you can directly verify with your preferred funds. Another thing to check is whether your mutual fund house allows digital KYC completion or requires in-person presence. I don't have the precise information on which fund allows the digital KYC, but based on my latest research, these funds don't require physical presence. But you can also confirm this during your application process with the mutual fund house. Regarding the third-party brokers like Zerodha, unfortunately Zerodha's coin app doesn't offer mutual fund investments for NRI based in US and Canada, and there were recent reports about issues with the Groww app, but you can verify if they allow NRIs from US or Canada. And if you use any other third-party broker app that works well for you right now, please share it with everyone here in the comment section, and let's keep an eye out for any discoveries in the comment section. And the last step, which is step number 3, is to understand the tax implications, which is based on the type of mutual fund and the duration for which you hold the mutual fund. Also, as US and Canada both has signed the DTAA, which is Double Taxation Avoidance Treaty with India, you can claim tax relief if you have already paid taxes in India, or if the taxes are higher in US or Canada compared to India, then you have to pay only the difference in the tax here in your residence country. So let's check out the taxation table. So if you invest in the equity mutual fund for less than 12 months, then it will be considered as short-term holding and 15% tax will be applicable. And if you hold that for more than 12 months, then 10% tax will be applicable. Respectively, you can see the duration and the taxation for balanced and debt type mutual funds. Last but very important point I want to mention is that in next 2 to 3 decades, India will see a great growth, and as NRI, we have to be the part of that success story. Jai Hind. Thank you for watching this video. If you like my content, please do like, share and subscribe the channel. If you have any questions, feel free to ask me in the comment section. This video is just for an educational purposes, and please do not consider it as any recommendation.